Boom. All right, what's going on, you guys? It's Royce Jacob, and welcome to the first edition of Waves Weekly. Okay, so this is going to be a new video series that I'm going to start uploading every weekend, and it's just going to be kind of a recap of any current events or recent news that's happened over the week, how I view them as affecting the markets, as well as going over kind of my portfolio performance over the week and what I did right, what I did wrong, and just kind of going over with you guys my thought processes in, again, what's going on overall in these markets. Okay, so yeah, this is a chart of the S&P. So you can see the week we had 3 solid days here. The Dow, S&P, pretty much all traditional markets rallied pretty strong for 3 straight days, and then just today, it is Friday. Just to timestamp this, I'm recording this on the evening of Friday, March 27th. Okay, so yeah, markets closed today low, dropped about 3 or 4%. Also to be expected after such a crazy rally, kind of a relief rally. Some people would call it a dead cat bounce, which is, again, pretty much just a relief rally. But we'll get back into these charts. I'll cover these last, okay? So just wanted to go over this one piece of news, and then we'll get into the charts again and kind of portfolio performance, okay? So, boom. This just released a couple hours ago. Trump signs the $2 trillion coronavirus economic relief bill into law, which includes checks for Americans and business loans. Okay, so I'm sure you're familiar with this. I assume you're following this. This is affecting all of us if you are a American, an employed American. Okay, so I'm sure you're familiar with this, but I just wanted to go over it real quick. So Trump signed a $2 trillion economic relief package on Friday to shore up an economy battered by the coronavirus pandemic. It will directly send $1,200 checks to millions of Americans and provide zero-interest loans to small businesses employing fewer than 500 workers. Again, economy is pretty much at a standstill right now. Everyone's quarantined. Everyone is not working for the most part. Not everyone. I definitely shouldn't say everyone. I personally am working. I'm fortunate to be working, but there are a lot of people really hurting out there and that are having a hard time. So these $1,200 checks, I know that they're being sent directly via direct deposit if you have filed with the IRS, if you are a good tax-paying American citizen and have filed your taxes and you have a bank account linked via direct deposit with the IRS. That should be coming to you within, I believe, 3 weeks. I think 3 weeks is the kind of the predated time frame that we will see this money. So that's nice. And we need this. The American economy really needs this. And I think this is probably the primary reason that the markets kind of bumped up this week on news of this stimulus package finally being finalized. So it got done. Nonetheless, the markets did drop today, so that kind of proves out the theory that this is a dead cat bounce and we have a further way down to go in traditional markets. But again, we'll get to that after this. I just wanted to show you guys this first. So this is just to kind of put it in perspective what $1 trillion looks like, okay? So this is a man, a person. Believe it or not, this little pile is $1 million. So let's actually start at the top. $100, this is a band, this is $10,000. You go here, this is $1 million. And you would think it would look like, honestly, prior to just looking this up, I thought $1 million would look like a little more than that, but it is just kind of that little wad right there. While a measly 1 million looked a little unimpressive, 100 million is more respectable. So this is $100 million. So obviously 100 of these makes one of those. And then you get to $1 billion, okay? So this is a lot of cash. So imagine if you were looking at that much cash, that would be completely overwhelming, right? But what's $1 trillion look like, okay? So this is $1 trillion. You see how this is a million. Very graspable. You can kind of wrap your head around that. This is $1 trillion. That is a fucking Costco warehouse full of money. That's what $1 trillion is in $100 bills. Little man and $1 trillion. Okay. So just to kind of put in perspective, I know there's some stats like $1 trillion is a dollar every second for like 37 years or something. I didn't look up that stat, but I just heard it the other day on a podcast. But again, $1 trillion is a ridiculous amount. $2 trillion is, well, like 10%, probably 10%-ish of US GDP. So $2 trillion stimulus, again, well warranted, necessary in my opinion. People need this money. It's very important so the economy doesn't just completely tank, which I don't want. I'm very bullish on the US. I want us to be successful. But But again, this is all kind of leading back into market performance and what I'm seeing in the markets, okay? So let's get back into those markets. All right, again, on the SPY, the Dow, all markets this past week, or the week starts. It's 27th. Okay, back here we had, it was up and down, but overall it was a pretty good week for the SPY and the Dow. Again, they're probably up net like 7% after today. But again, that's to be expected after such a ridiculous fall down. And again, I'm sure you guys are kind of familiar with these markets. You guys have been watching them along with me. But I wanted to show you this chart that I saw in a video that is by the channel Data Dash. His name is Nicholas Martin, and he's probably one of my primary go-to voices in the investment, cryptocurrency, etc. space, just investment overall space on YouTube. I really like his technical analysis, his fundamental analysis. That's him right there. And I just wanted to show you guys this chart that he had in one of his videos. Okay, so this shows the DJI, the Dow Jones Industrial price chart during the crash of the Great Depression right here in 1929. And then it overlaps what it's looking like today. Okay, so as you can see here, zoom in a little bit. So 1929, we had this insane crash down. So this took 40 days right here. This span was 40 days of this crash. So down 40% in 40 days. It bounced up 20% in 2 days. So again, that's that dead cat bounce. That's that relief rally. When people get a little bit of good news, they get bullish and optimistic again. When the fundamentals really don't align. And that's kind of what's happening now. The fundamentals just aren't aligning. The economy is not getting better aside from this stimulus package, which might make it a little better, but there is so many people out of work. Unemployment hit 3.2 million this week. It's probably more realistically like 5 million, just because the 3.2 million is only the people that went in and actually did it. So I'm assuming next week when they report next Friday, it's going to be at the very least 5 million unemployment. That's going to be the number of unemployments or registered unemployment peoples is going to be about 5 million at the very least. Okay, so the economics, the fundamentals are not aligning for this market to be over. The bear market is, in my opinion, not over. And I think it will repeat what happened here in 1929 in the Great Depression. Okay, so again, in 2 days, 40 days, it went down 40%. In 2 days, it bounced back 20%, which is what almost exactly just happened on Wednesday and Thursday. Bounced up 20% in 2 days, and then today it was down 3%, and then it's probably going to start this move downwards again. So after that 2-day pop, it went down the next week another 30%ish. Okay, so I assume that's what's gonna happen. Again, the fundamentals around both of these times are very similar. Unemployment is up. There's a lot of uncertainty in the world. Everyone's kind of scared. So it would not surprise me at all. These are very similar looking charts. You can see it was great times prior to this happening, and then once you get that very significant, very kind of earth-shattering drop, you lose a lot of the fundamental perspective. And again, history is very telling when you're talking price analysis and market performance. So I suspect something like this will happen. Again, I want to reassure you guys that this is not direct investment advice. This is just my opinion based on the research that I'm doing and how I'm personally comprehending this. So this is just what I think is going to happen. But again, it could very well bounce back. That would be awesome for our economy. Again, I want our economy to succeed long term, and I think it will succeed long term. I believe in humans as a people, specifically our nation, to succeed. And I think it will come back eventually, but I think this will be a longer ride down and a very slow ride back up, just because the economy is in such a bad place. We are literally stood still right now, and even with the stimulus package, we are going to face a long road ahead. I just heard a guy named Chamal, I can't remember his last name. Just heard a great podcast on Recode Decode with this guy, and he was saying for every month that a company's out of business, it is going to take at least 3 months to come back online. So for every month that you're down, it's going to take 3 months to reach back to where you were prior to that. So imagine if this goes on for 3 to 6 months, that's going to take I mean, 9 to 18 months. Okay, so again, like, things come back a lot slower than they can fall in a time of global crisis, especially. Okay, so just keep that in mind, guys. We're not out of the water yet. The water is still very rough out there. The water's still bloody. Okay, so just keep that in mind. Be safe. And yeah, let's start going over some of these positions. So we'll talk about this first position that I had. I didn't play this too well. Again, I've had these contracts since I think Tuesday. So I actually started with an AMD contract. AMD, Advanced Micro Devices. Both of these are chip stocks. AMD is the one I had prior. It was actually more of a 50-50 coming into the week. You guys might know that if you're following some of my stuff. But I did have some AMD shorts in line and some Micron Technology. These are both chip stocks. And I had put options on both of these, okay? So I thought they were going to go down. Again, the entire market rallied. So they did climb back up a little bit. I was down on my money for the beginning of the week. I kind of pulled some of the positions on Wednesday when the market started to rally, because I was just like, shit, there's no fundamentals here. This is that relief rally. This is that dead count bounce that I was kind of expecting. So I pulled some of my positions on Wednesday. I re-entered them on Thursday when the market was back up. And again, I saw it's like people are saying buy the dip. I'm like, fucking sell the rip, you know? So yeah, so I bought back in on Thursday after AMD and Micron announced earnings, or Micron, I should say, announced earnings on Wednesday. The stock popped, causing AMD to go up along with Micron because they announced promising earnings. But I'm kind of calling bullshit on that. If the earnings really haven't reflected the reality of what's happening right now. These are both chip stocks. Chips are in computers, tablets, phones, etc. And fucking no one's working right now. No one has money. And again, their earnings did not reflect what's actually happening right now. Maybe very little in the past couple weeks, but once this kind of economic no money crisis actually gets to people, it will affect earnings. No one's gonna be fucking buying expensive tablets and stuff. I know there's a lot of remote working and fucking school from home and all that going on right now. So there might have been a very brief spur of buying a tablet if you don't have one. Who doesn't have a tablet? So that might have again, this is all super temporary in my mind. The earnings do not reflect the reality of what's about to come economically. Again, no one's gonna have money, no one's working, everyone's scared, no one's gonna be splurging on things, and that's gonna affect chip makers heavily. Even though the markets may not be reflecting that right now, they for sure will. And I'm confident next week that, again, we're probably gonna go down, and the chips, because they are part of the S&P 500 companies, will go down as well. And again, I think these are overvalued right now. AMD specifically. The technicals on Micron just look a little worse, so I decided to go more in on my Micron shorts. But I mean, I don't like the fundamentals of either right now. I don't really like the fundamentals of any company in the S&P, to be completely honest. Again, but I'm bearish on the short term. It could not be that way. It could bounce back, and great if so. I'm out of money, but it's great for the majority of people. But yeah, I personally think it's going to go down more, and that's why I am holding these Micron puts over the weekend, because I think Micron, AMD, as well as the rest of the traditional market will fall next week. Okay, so that was that. I also added to my Bitcoin position. I had this, which fucking sucks because it just tanked like a couple hours ago. So that's a bummer. I had these rising wedges. Like, the technicals were looking good. I was just praising Bitcoin in a video I released earlier this week. Because again, the technicals look good. It is holding up in a very scary time, when it is a very kind of scary asset to most. So I had these nice ascending wedge patterns. It had this top line of resistance that I was kind of bouncing on for the past week or so. Lower highs, again, textbook ascending wedge. And yeah, earlier today it just broke that completely, so that fucking sucks. But I'm in Bitcoin for the long term. I believe in sort of very strongly in the fundamentals of Bitcoin. So I mean, I'm gonna keep averaging in on Monday. If maybe even tomorrow. We'll see. But likely on Monday, seeing how this dip plays out, I'll probably buy more. And it is likely I will buy more. It sucks. I could have timed it better, I know, but you can't think like that. Again, especially if you believe something for the long-term prospects of it. I mean, just average in dollar cost average, put in a little bit on every dip, and I mean, hope for the best. Again, I could have played it better, but you can't fucking dwell on your losses like that. Okay, so don't get greedy. Just again, look forward to the future and be optimistic about the long term of your assets that you believe in. Okay, so again, I'm gonna look at that. I added a little bit of Ethereum to my current position as well, but I mean, during times like these, it's gonna pretty closely track the price action of Bitcoin, and until Bitcoin reaches previous highs again, I don't think Ethereum will make any significant movement until again Bitcoin surpasses its previous highs. So once Bitcoin hits 20K and above, I think Ethereum and XRP, Chainlink, etc. are gonna fucking take off. But we'll deal with that. We'll cross that bridge when we come to it, eh? Okay, so that was that. We covered Micron, and then Moderna. So this is, I fucking love this chart right now. Okay, so this is Moderna. Again, this is another kind of ascending triangle pattern, ascending wedge, whatever you want to call it. And the fundamentals with this are great. I was talking before about how this is feeling kind of bubbly to me. People are very emotional. Sorry, I should preface that Moderna is one of the companies who is at the very head of creating a potential vaccine for the coronavirus. So again, this chart looks great. It is creating an ascending, there's an ascending, almost two ascending triangles getting created here. And again, these are just kind of upward trend lines that I'm drawing. So they're looking good right now. Again, it's holding this line of resistance well and support right at $30. A nice even number. That's a good psychological number as well. So again, I think the fundamentals behind this company are good. They're releasing good news. I think it's a very risky company to hold, because say another company comes out with a successful vaccine, then this could very well tank. But from all the news that I've been reading up on Moderna, they seem promising. Their methods are good. They have very good analyst ratings, and they're a solid company overall, in my opinion, again. But yeah, we had a rally up of about, I think, 8%, 8 or 9% today. Where is it? Moderna is right here. So 7.55% up today. Zoom in a little here, but I just wanted to show you guys that kind of ascent, like two ascending wedges that are going on in Moderna right now. So the technicals are very good. There's a lot of volume, which is good. People are watching it. And again, during times like these, when this is a company doing potentially a very good thing for humanity, and there's a lot of emotion running, that is when bubbles can potentially be created. Okay, so the chart's looking good. Again, this reminds me of kind of early crypto, early cannabis bubbles, and I feel like this, I just feel it on my gut. I feel it on my plums. I feel like this can take off, given even the slightest bit of good news, and even if it doesn't release good news, if coronavirus, which almost inevitably will, the numbers of cases and deaths will go up, just because the current numbers are a lagging indicator, which means that there's way more people that actually have the virus than the numbers are saying, just because the numbers being portrayed are only the amount of people being tested, right? Okay, so if you're not getting tested, the numbers aren't going to reflect the fact that you have it. Okay, so there's probably a lot more people who actually have it. This will affect, again, keep increasing the fear around this virus over the near future at least. I don't know about the mid to long term for sure, but over the next week or so, it will go up. The numbers will go up, and that will evoke fear in people and make them flock to a potential solution to it. Okay, so I'm very bullish on Moderna right now, both technically and fundamentally. So I have a pretty large position on a long. I have a $50 call that expires in July on Moderna, and I do not plan on selling those anytime soon, unless it absolutely tanks. If it breaks one of these trend lines, I might have to reconsider, just because the technical aspect of it is completely broken. But again, that's the risk I'm willing to take, and that is probably my favorite position right now. It's the position I'm most excited about, and I'm most excited to see how it performs next week. Okay, so yeah, I hope you guys like this first edition of Waves Weekly. I'm excited just to do these kind of weekly wrap-ups going forward. Again, I'll upload these every weekend, and yeah, just let me know down below. I'll try to post a video every Wednesday and Saturday or Sunday. Again, every Wednesday or every weekend, I'll do my best to post a video. So maybe on my Wednesday videos, just let me know what you want to see or comment on the previous week's Waves Weekly, and let me know if you want me to cover anything, or yeah, just if you guys want to talk about whatever's. So yeah, again, I'm always here for you guys. Comment, I'll respond to all of them. And yeah, I appreciate you guys watching. So remember, you guys, make waves in these markets. Until next time, peace. Waves Weekly, baby.